currency time is around 9:45. So what I thought is to lay my hands on Forex market, guys. So as early as possible, once if you even try to learn in Forex also, I think it will be definitely helpful, guys. So why not? And I thought of like, okay, let's even trade in Forex. So from now on, I'll be uploading videos in Forex as well. So the major currency pair here is the Euro US dollar, guy. So I would be explaining my trade analysis majorly on Euro USD, and there are many other trades currency pairs as well as the US dollar and Japanese yen as well, and British pound US dollar is there, and Euro British pound and Euro Japanese yen. There are multiple pairs, guys, but uh, the major currency pair where it's been traded the most is Euro USD. So I would be trading and explaining my trade analysis basically mostly based on the Euro USD dollar itself, guys. And in case if I find many trade setups in other currency pairs, definitely I would be uploading as well. So let's start with Euro USD, guys. And let's look into a daily time frame analysis and let's look in and let's analyze the overall picture of the market. What you can see here is that the market has swing some kind of huge bullish momentum and the market retraced here, taking support from the 21 moving average over here and continued further bullish. Again, retraced, guys, consolidated. Again, broke structure towards the upside. And you can see this kind of consolidation. So there is a very good chance the market might further continue bullish. But what we need to see here now, guys. So if you consider this bullish momentum over here, the common point between this to the common point between this, you can see the price is taking support from 0.38 level over here. You can see the clear support, guys, the 0.38 level, clearly indicating bullishness. So if you try to plot the fib extinction level, guys, the common point between this to the common point between this to the common point between this. So you could have targeted the 100% move, and next you could target it all the way to 1.68 level as well. But you see 100% move over here. So as of now, the market sentiment is bullish only. And you can see the market broke structure over here and mitigated this fair value gap, or you can consider this imbalance over here, where price has not been traded and rejected price from these levels and continued further bullish. So let's look into a intraday bias and let's analyze, guys, and daily time frame analysis. So in case if you consider the origin of the impulsive momentum, guys, you can see if you consider from here, let's consider from the low of this candle to up towards the upside. So what you can see here is that the market here, guys, uh, the market here swept this high and closed within this range. So what we need to see is to look for this low after this candle. And after this, the candle broke even this level also. So the next target would have been this candle over here. So here the market even took this low and closed below this level. So for the next day, you could have targeted this low, guys, here. So I hope you're understanding what I'm saying. So the first day, the market swept this high, guys, and closed within this previous candle's range. So once there is a rejection and price closing between these ranges, guys, you should next look for the next candle's low over here. But here you can see the market rejected price from here, this low, this low, this low, this low, this low, and closed below these levels over here, clearly indicating bearishness. And for the next day also, you could have looked for bearish to break the lower lows of this level. And you can see the market clearly broke. And after this candle, guys, what you could have expected is that the next candle also breaking this low. But what happened is that the market gapped up here. So you can see the market closed here, guys, and the market opened over here, clearly showing a gap up and closed above the previous candle, guys, and even the previous candle range, clearly indicating bullishness. So here the market failed the entire price action over here, showing a clear sentiment that the market is bullish. And you could have waited for this candlestick formation because there might be high chances that the market might, on this day, guys, sweep this liquidity below this candle and closed within this range and continued further bullish. But you can see the low of this candle has not been taken. So this low is a strong confluence over here in future price action. And you can see the market clearly broke this structure high. And after this, you could have looked for this high as well. So you can see further continued bullish. And you could have looked for another high, and you can look for the other high. And here you can see the market here broke this high and closed within this range, guys. So for the next day, you could have looked for this low over here. But you can see clearly the market here, as the market sentiment is very bullish, as you can see, The market didn't retrace to 0.38 level, nor the 50 levels, even after this price rejection. Instead, the market over here, if you consider this swing momentum over here, guys, what you can see is that this is the close, guys. So the market almost opened here, rejected price from these levels and moved upside. So definitely this sweep, this liquidity over here has not been taken. So let's not consider this one. So the market again broke this high as well. So for the next day, what you could have looked for is this candle high over here. But here you can see inside a candle that formed, and further the market even broke this high. And for the next day, you could have looked for this high after this kind of bullish momentum. The next day also the market would have broken towards the upside, but the market formed an insider candle. And you can see the market on the further after the inside candle formation, the market broke this low. And here the market failed to sweep this high, guys. Instead, the market swept this low and closed within this range, clearly indicating bullishness. So you can see the previous low has been taken and swept inside. So after this sweeping of this low and market closing within this range, you could have looked for this high over here. And you can see the market rejecting price again formed an insider candle, but definitely the high was been taken. And market rejected price and closed within this range. But you can see again the market broke this high towards the upside. And this low was not being mitigated over here. So we should mark this level as well. And further, the market even broke this high as well. And you can see again the market even next day even broke that high and swept this high as well. And sweeping this high, the market closed within this range, sweeping this previous high. So when you find the previous high taken and sweeping this range, you should have looked for short position. And definitely here, after this sweeping of this day, you should have taken short position, keeping a stop loss just above the candle itself, as you can see. And further, the market here swept this low and closed within this range. But further, the market showed another bearish momentum over here. So this liquidity over here has not been mitigated over here. You can see this. But this low has been taken, guys. And you can see again the market again swept this low and closed within this range, clearly signifying another bullish momentum. So this liquidity has not been taken out. So these are all failure swings, guys. And you can see again the market showed some kind of bearish sentiment on the next day as well. So the market swept the previous low also here and closed below this level. So what you could have looked for is another low over here. And you can see the market swept and closed within this range. So what you could have looked for is this high over here. But next day the market formed, swept the low of this candle and closed within this range, guys. So these are also a failure swing. The market failed to sweep this high over here. So these are definitely failure swings where the market would definitely go and mitigate these levels, guys. And you can see again the market over here swept this low, but here you can see the market swept this low, guys, and closed within this range. This candle though is very bullish. So the next candle, what you could have looked for this candle high over here. You can see this candle high is where you could have looked for. But here you can see whether the market closed above. You see, definitely the market closed above this range only, guys. So what you could have looked for next day is this high over here. And this high, you can see the market went all the way to the previous candle's high and closed within this range. So we could have looked for low candles over here. And in this candle, the market swept this low and closed within this range. So you could have looked for this high over here. So the market failed to make a lower low. Instead, it broke structure. But this price action is perfect, guys. And you can see the market closed above this candle. So for the next day, you could have looked for this high over here. So even the failure swings has been taken out, guys, here. All these swings are, and you can see this bullish momentum. Definitely after this high wave candle, this where you could have taken short long position over here, and this candle where the market swept here could have taken short position, and all these failure swings over here was swept out by one bullish candle over here, clearly signifying bullishness, guys. You can see whenever extended these levels over here, all these levels has been mitigated now, guys. You can see how the market swept this low and closed within this range, and this kind of momentum, the high also has been taken. So the entire confluence here has been done, guys. So next, what you could have looked for this candle over here, this high over here, but in the next day the market formed an insider candle, and after that the market another formed another insider candle. You can see this huge candle. The previous candles are all insider candles. You can see the market swept this low and closed below this level. So for the next day you could have looked for this low over here, guys. As you can see the market here swept this low, but this kind of insider candles is indecision candles, guys. So definitely you shouldn't consider whenever you find insider candles over here. So what you could have seen is that the market again closing within this range, guys. Market failed to sweep below this level. So let's mark it out. But this is an insider candle, guys. So you can see again the market here swept this high and closed within this range. But you can see after this kind of huge bullish candle, the market swept all these highs over here and even this high over here. This is very important, guys, not this insider candles. And after this candle, so you could have taken long position. But what you can see is that the market took this high on the next day, and the market should have aimed for this high as well. So what you can see here is that the market swept this high and another 4 days of insider candles, guys, where the market was trading within the zone. And the market here on this day swept this high and closed above. And the next day, what you could have looked for this high, guys. But here you can see the market failed to sweep this high. Instead, the market is trying to head lower. So after this kind of insider candle, you could have either looked for low or high of this candle. You can see the market swept this low and even closed below. So for the next candle, you could have looked for this low, guys. But here you can see the market found another insider candle and another insider candle. And there is one failure swing over here. And here, though I'm not considering to be a failure swing, but definitely, though if you consider it to be an insider candle also, you can see the market rejecting price and continuing further. So I'm not sure whether the market here, guys, you can see here the market formed an insider candle. And after that, the market even swept this low, guys, this low and this low, this low. So I didn't analyze this one. So let's analyze this here as well. This is an insider candle. And if you see here, guys, the market here swept previous low over here. But here the market failed to sweep this low. So this is one failure swing where the market next day failed to sweep this low and but instead the market closed within this range. So you can see this high also has been taken. And you can see this is an insider candle. So definitely we won't consider it. But you can see this low though has not been swept, guys, and this high also has not been swept. So let's try to extend these levels and see whether the market will come and mitigate this level. But this is about intraday bias, guys. So intraday bias is only will help you to only make decisions whether the market sentiment would be bullish or bearish, but it doesn't help you. It gives the overall picture for you guys whether you should take a long position or a short position, but it doesn't tells you the exact point where you need to look for taking long position or short position. But in case, guys, if you have understood this video, this what I have mentioned to you about how the market will sweep the liquidity and open high low close strategy. So this is about you can see these failures swing over here. Definitely the market will go and mitigate these levels, guys. So there is very high chance the market might go and break this level. But what I want to see is the sweep of this low, guys. So there is one low over here. There is another low over here. As long as the market sweeps this low, and you can expect further bullish momentum. So let's take all this out, guys. So you can see the market formed an insider candle. So I'll be explaining the previous 2 to 3 days video recently, and I would be predicting what the market will happen. So you can see this insider candle over here. So you could have looked for this high, guys, to be taken after this kind of bullish momentum, but the market formed an insider candle. So you could have expected this high also to be taken the next day with another bullish momentum breaking both these levels high over here. But you can see the market failed to cross here, but instead the market broke this low and closed below this level. So you could have looked for next day also to break this low, but instead the market formed another inside candle and even failed to sweep this low over here, guys. So let's look into a 5 minute time frame and analyze how you could have taken setups over here. You can see this is one failure swing. So let's look into a smaller time frame, guys, and analyze how you could have taken positions. So so let's take this drawings out, and if you consider these swings over here, well, let's keep it, guys. You can see the market here in a daily time frame analysis, guys, was trading in an all-time high over here. So what you could have looked for is that once the market forms a chalk over here is where you can look for short setups. So what you can see here is that the market was trending all the way towards the upside here. So you can consider this kind of huge bullish momentum where the market, guys, uh, broke structure, consolidated, broke structure towards the upside, consolidated, and you can see this kind of reversal over here. This is where the market changed the sentiment from being bullish to bearish. You can see the market structure shift, or you can consider initial chalk formation. So you can't, after this kind of huge momentum towards the downside, where the market even mitigated its fair value gap over here, and came all the way to this demand level, or you can consider the order block level as well. You can see this is the order block level, guys. The last up candle, which broke structure to mitigated this order block as well. So previous price action I'll be explaining to you. Once if this order block has been mitigated, it doesn't hold any value, guys. Here you can see the order block level has been here mitigated and it doesn't hold any value. So let's take this out. And what you could have looked here is to look for short setups, guys. So in case if you try to plot the compounded in this to the compounded in this, you can see the market here retraced all the way to 550 levels over here. This is the 550, guys. And for better confluence, guys, what you could have taken is to mark the retracement levels fib over here. And what you could have done is to mark the 0.5 levels over here in case if the market breaks this level, or the neckline liquidity also, once if this neckline also has been broken. But let me mark the retracement level 0.5 levels, or let's first mark the anchor way up level of this swing high. So what you can see here is that the market here showed some kind of bullish momentum towards the upside, and market retraced, took support from the 21 moving average and broke structure towards the upside. But market failed to make an higher high. You can see the market here failed to make an higher high. Instead, the market broke structure towards the downside here. This is an internal chalk formation over here. If you look into a 1 minute time frame over here, I would be explaining to you how the price action here has behaved. So let's try to analyze here. Right? So you can see clearly this chalk formation in a 1 minute time frame over here. So this is the retracement levels of this fib price. You can see clearly the market broke chalk formation over here. Here it formed a chalk over here, but it didn't show any retracement. Continuously market headed towards the upside, but here market failed to make a higher high. Instead, it broke structure towards the downside. And if you consider this swing momentum over here, the high of this candle to the low of this candle over here, you can see this kind of here. You could have marked the optimum trade entry zone, and this optimum trade entry zone is in confluence with this optimum trade entry zone is in confluence with the fair value gap over here. You can see there is a fair value gap over here, guys, where market has not yet mitigated. So after the market mitigating this optimum trade entry zone or the fair value gap over here, the market again broke the structure towards the downside. So you can see clear chalk, another break of structure towards the downside here. Chalk formation, retraced optimum trade entry, and another chalk formation over break of structure here. And if you consider this swing momentum of here, the common point within this to the common point within this, you can see the market retracing all the way to this 50 levels over here. This is the 50 levels where the market retraced all the way to these levels. But here you can see the market retracing, rejecting price from 200 moving average over here, and the 9 as well as 21 moving average, and this candle over here even broke the 0.5 levels of the retracement, guys. You can see this retracement, I have told you, this candle in a 1 minute time frame broke this towards the downside. So this is where you could have easily entered short position, guys, keeping a short loss just above this candle itself and targeting all the way towards the downside. And for target levels, guys, what you could have done is, if you're looking to higher time frame analysis and see, let's look into higher time frame. And if you consider this momentum, guys, the chalk formation, if you try to plot the fib extinction levels here, the common point between this to the common point between this to the common point between this, so you could have targeted the 100% move over here. See clearly the 100% move. Or the next target is where you could have targeted the 1.6 as well. But definitely you could have traded it as long as the market is reaching all the way to 9 as well as 21 moving average. You can see clearly the market reached all the way to this level. This was one beautiful trade setup where you could have taken with a proper risk to reward ratio, guys. So you can see after this kind of huge momentum, again the market showed some kind of retracement towards the upside. And if you try to plot the fib levels here, the common point in this, you can see the market again retracing to 550 levels over here. So in case if you might have even entered your position at this 550 levels, guys, and try to plot the fib extinction levels over here, the common point between this to the common point between this to the common point between this. So you could have targeted the 100% move. This is the 100% move where you could have targeted. So I hope you're understanding, guys. You could have targeted it all the way to this level and see exactly at this moment where the price formed another bullish engulfing pattern over here, where the market swept the previous low, guys. If you see here, the market here swept the low and closed within this range, clearly signifying some sort of bullishness. So that's where you could have entered, as you can see how beautifully you could have taken this trade over here with a proper risk to reward ratio. But here you can see you could expect the market to reach all the way levels. You can see if we extend these levels, the market was showing some sort of resistance at this 50 levels. But here the market failed to make a lower low here, guys. You can see. Instead, the market took support from these levels over here and continued further bullish. So let's look into a lower time frame analysis and see how you could have taken trade over here. So if you try to plot this swing low over here, you can see market came exactly at this swing low over here, guys, where market over here failed to make a lower low. Instead, the market here formed a chalk over here. You can see this kind of chalk formation, guys. Immediately at this momentum over here, clearly indicating some sort of bullishness. So let's look into higher time frame and see how the market here behaved. You can consider this to be a chalk formation only. Again, the market retraced and continued further bullish. So this was the next day's high, guys. So what you could have done here in major currency pairs, the market failed to make a lower low. So if you consider this swing momentum over here, the low of this candle to the high of this candle, you can see whenever price taking support from the optimum trade entry over here, you can see how the market is taking support over here, the optimum trade entry zone. And in case if you try to plot the fib extension levels, guys, here, the common point within this, to the common point within this, to the common point within this. So what you could have targeted is, you can see the market came exactly all the way to 4.26 level over here. You can see, guys, keeping your stop loss just below this candle, guys. And I don't know whether if you have this conviction to hold your trades or not, but definitely based on price action is how you could have taken, because you can see a major swing loss over here where the market here clearly showed some kind of bearish momentum, but you can see the same kind of recovery from lower sides here, clearly indicating some sort of bullishness. So that's how you could have taken trade, guys. See, after this, the market clearly showed a huge bearish momentum. So if you consider the low of this candle to the high of this candle, the common point in this, the market taking support from 0.38 level over here. But here the market broke the structure here, but was not able to sustain, guys. So you can see the 0.38 level where price is taking support. So if you look into a 5-minute time frame, you can see the market taking support from 0.38 level. So if you consider the swing over here, the common point in this to the common point in this, you can see the 0.38 level where price is taking support. And again, the market broke structure towards the upside. You can see a clear break of structure here. But after this break of structure, guys, the market would have retraced to optimum trade entry over here and continued further bullish. But you can see if you consider the low of this candle to high of this candle, the market came all the way to this optimum trade entry, but failed to make an higher high here. Instead, the market broke structure towards the downside, clearly changing the market sentiment here from being bullish to bearish. And this is the initial stock formation over here. And after this, you can see, guys, how the market was trending lower towards the market didn't even retrace here. If you consider this chalk form after this chalk formation, what you could have considered is to mark the fib levels or the retracement levels, guys. So if you consider the common point between this to the common point between this, so if you mark here, guys, you can see this is the 50 levels over here. Exactly, the market came mitigated is 50 level over here and rejected price from these levels and continued further bearish. So if you try to plot the fib extension levels here, the common point between this to the common point between this to the common point between this, so you could have targeted the 100% move, the 1.68 level over here, and the you can see the market came all the way to 2.6 level as well. So what you could have done is to exit here, guys, the 1.68 level, or as long as the market is trading below this range. So, but we need to wait for proper confirmation, guys. Once the neckline has been broken here, you can see the price action over here, where the market rejected price from 550 levels. So what you could have looked is to wait for the retracement here, guys, making the neckline being broken. So the compounded in this to the compounded in this. So you could have waited for the 0.5 levels to be broken towards the downside. This is the 0.5 level. And if you try to plot the anchor way up level here, of this swing high. You can see the market rejected price from here, clearly indicating bearishness. So this was yesterday's, guys. So yesterday's gap level, this is today's. So even here also the market is trading below, clearly indicating bearishness. So what you could have once if this neckline has been broken and the market formed a break of structure over here, guys. Clearly, as you can see, the market broke structure over here. Either you could have taken long short position over here, or if you consider the swing momentum over here, the high of this candle to the low of this candle is where you could have marked here, and you could have marked the optimum trade entry zone over here, where the market retraced to this optimum trade entry. And this is where you could have taken short position, keeping your stop loss just above that candle. And if you try to plot the Fib extinction levels, the common point in this to the common point in this, so you could have targeted it. So you can see exactly the market came all the way to the close levels here. You can see the 1.68 level lies. The 1.68 level, keeping your stop loss just above this candle itself, guys, and targeting it all the way to 1.68 level. Or in case if the market continues further bearish, you can see, guys, exactly at 4.26 level the market came. You can see exactly here the market came, guys, and mitigated this level. So this is how you could have traded, guys. The 4.2 level over here is where exactly the market came. I hope you understand, guys, how you could have taken. So what I've told you is that after the market formed a chalk over here, you could have waited for retracement. Either you could have taken short position here itself, guys. So you could have definitely taken short position here, keeping your stop loss, and you could have targeted this swing low here or any swing lows over here. You can see this is one swing low, or you could have targeted this low also. So the market even broke this low. So you can see the market came all the way to these levels as well. So definitely you could have marked entered here also, guys. Definitely you could have taken position and target levels targeted towards the downside. But here the market showed a clear price action over here, where here the market fair here there was some fair value gap here, guys. So you could expect the market to mitigate these fair value gaps and continue further bearish. So you could have marked the optimum trade entry, and exactly that's how the market here came and reached all the way to 4.26 level over here. So I hope you're understanding, guys. We have captured a 4.26 level towards the upside here and a 4.26 level towards the downside as well. So this target was exactly at 4.26 level, guys. You can go and watch these levels. So it was 4.26, and towards the downside also the market exactly came. And you can see this kind of V-shaped recovery clearly indicating some sort of bullishness, guys. So, and if you consider this swing momentum after the market mitigating, guys, you can consider this whole momentum as a single swing. So if you try to plot the common point between this to the common point between this, you can see again the market mitigating this optimum trade entry zone over here. This is the optimum trade entry zone, guys, where the market mitigated and continued further bearish. So if you look into a lower time frame, analyze how you could have taken long position also here. It's when look at this, guys, over here, where the market came all the way here. The market formed a chalk over here. You can see a clear chalk formation, the chalk formation over here. But here the market didn't form a chalk. Clearly the market has to cross these levels only, then we can consider it. So definitely you can see this momentum though. And the momentum here, there is no fair value gap or imbalance. Clearly the market showing a very good bullish momentum. And after that, the market here again broke structure towards the upside. So what you could have done is, in case if you could have considered the compounded in this, to the compounded in this, the market rejecting price from 0.38 level over here. This is the 0.38 level where price is rejecting. And the market here broke structure towards the upside. You can see a clear break of structure. And the market rejecting and closing within the 21 moving average, clearly signifying bullishness. So again, the market broke structure towards the upside, and the last down candle which broke structure towards the upside is this candle over here, is the order block. You can see the market coming and mitigating this order block level as well. So either you could have entered your position here, or you can see again the market came and showed another momentum. Once this order block has been mitigated, again, what you could have done is to plot the fib levels of this retracement towards it. Once if this been broken towards the upside, this is where you could have easily entered this candlestick formation confirmation towards the upside, keeping your stop loss just below that candle itself. And for target levels, guys, what you could have done is that initially the common point between this to the common point between this to the common point between this. So you could have targeted it all the way to the 1.68 level over here. or the 2.6 level over here. But let's look into this order block level, guys. So if you consider this momentum over here, the common point in this, to the common point within this, to the common point within this. So you could have targeted it all the way to 4.26 exactly at this level. As you can see, this is where exactly the market came. And again, the market retraced to this level. So here you can consider this to be 50 level. So let's look into higher time frame analysis. So in case if you could have traded, you could have kept it all the way to this level, guys. This was another 4.26 entry over here. I wanted to trade based on confirmation only. As you can see, definitely the market here was sentiment was bullish, and after this kind of huge bearish candle, this one candle broke the 9 as well as 21 moving average towards the upside, keeping your stop loss just below that candle and targeting. I hope you're understanding this. Even in a 5-minute time frame, also you can make this out. And if you consider this swing momentum, guys, so if you consider the low to high of this candle, the market didn't retrace to 0.38 level. Definitely, this is a single swing, guys. You can see the market didn't retrace, so you can consider this whole momentum as a single swing. So the common point within this to the common point within this. So you could have clearly marked the 550 levels where price is taking support over here. You can see this is the 550 level where price is taking support over here, 550 level. So in case if you try to plot the fib extinction levels over here, guys, the common point between this to the common point between this to the common point between this. So exactly the 100% move, guys. I hope you are getting what I'm saying. Based upon risk to reward ratio only you could have taken, guys. So I didn't ask you to take a position here, but definitely I will teach you exactly where you could have taken long position. So your target levels has been hit now, guys. So what you could have done is let's look into a smaller time frame and see how you could have taken this trade over here. So you can see the market here consolidating over here. But what you can see here is the market here failed to make a lower low. Instead, the market broke structure towards the upside. So if we consider this impulsive momentum, the market is not impulsive. It clearly broke towards the upside, guys. So, and what you can see is that here the market clearly shows some kind of bullish momentum. You can see a clear chalk formation over here. So what you could have done is to mark the demand level over here. So if you consider the swing momentum over here, the common point between this to the common point between this, you can see the market came exactly at this order block level itself. So if you consider this swing over here, the high to low of this candle, once at this 0.5 levels has been broken towards the upside, you can see this is the 0.5 level, guys, where market broke towards the upside. Here the market is trading above the 200 moving average, the 9 as well as 21 moving average. This is where exactly you could have taken, keeping your stop loss just below that candle and targeting it all the way to this upside, guys. One entry was here, another best entry was here, guys. So that's how you could have taken your positions. So this is how you could have taken this. After better confirmation only, you could have taken. Either you could have expected from here itself the market trying to move all the way to this 100% move, but you could have just kept your stop loss just below that candle itself, guys, clearly indicating the market sentiment would be bearish. And you can see after this, the market rejected price from this optimum trade entry zone over here, but market failed to close below this level, guys. This is the swing low, but the market retraced here and further broke the structure towards the downside. You can see clearly here is where the market formed a chop over here, changing the market sentiment initially from being bullish to bearish. So if you consider this impulsive momentum towards the downside, the last up candle before the down move, so you can consider this momentum candles, guys. So if you consider this momentum over here, you can see the market retracing all the way to this fair value gap. So you can consider this for 50 levels over here. You can see this kind of imbalance move, guys, the market coming and mitigating this fair value gaps over here. So what we could have done is to plot the fib extinction levels, the height of this candle to the low of this candle to this high of this candle. So you could have targeted all the way to the 100% move, but here you can see the market didn't reach, guys. So the market here showed some sort of support and continued further bullish momentum. What you can see is to mark your 100% move over here to see in case the market comes to all the way to this level over here. So you could have tried your stop losses. That's it, guys. So keeping your stop losses just above this candle itself. And in case if you try to plot the anchor view up level here, the high of this candle, you can see rejection of price from this candle itself. So you could have targeted it all the way to this levels over here. So after this kind of retracement, the market trying to break structure towards the downside, this is where you could have tried and you could have either expected the market to reach all the way to this 100% move. But you can see instead the market on the next day itself showed some kind of bullish momentum towards the upside, clearly indicating the market sentiment being bullish. So you can see clearly the market formed a chalk over here and market failed to come all the way to this low, guys. What we expected on a daily time frame analysis is that the market would definitely, after this kind of candle, guys, the market would breach this low, but previous low, this candle low. So let's mark it double thickness. So in a 5 minute time frame, if you see, the market definitely could have swept this low and continued further bullish like this. You can see coming this low and continued further bullish, guys. But market here didn't sweep this low, guys, and broke structure towards the upside, clearly indicating a failure swing over here. So there is high chance the market might liquidate these levels over here, and you can expect the market to reverse, guys, and continue and take this liquidity, guys. Definitely this liquidity over here. Mark mark my level, guys. This level, the 1.13 level, definitely would be taken. So you can see a chalk formation over here. So if you consider this swing over here, the common point between this to the common point between this, you can see exactly the market coming all the way to this optimum trade entry zone, which is in confluence with optimum trade entry zone, which is in confluence with the fair value gap here, guys. So as soon as the market mitigating this optimum trade entry, you can see reaction on price. So whenever you find such sort of reaction, you always mark the few levels, guys, the common point between this to the common point between this. So you could have marked the 0.5 levels over here. This is the 0.5 level. So you can see clearly after this, the market clearly broke structure to this high also, a clear break of structure. So the last down move which actually broke structure is this candle over here. This is a 5 minute order block. So market came mitigated this order block. Either you could have entered your position here, guys, or somewhere here, or somewhere here as well. So in case if you try to plot the fib extinction levels, the common point in this, to the common point in this, to the common point in this. So what you could have targeted is the 1.68 level over here, or or you could have targeted to somewhere along here levels. But let's consider the order block levels here. So the common point between this to the common point between this to the common point between this. So you can see, guys, exactly the market coming all the way to this 1.6. I think this is where you could have targeted it, guys. So keeping your stop losses is important, guys, because here in this market, definitely what you can see is to take your position over here, keeping your stop loss just below this candle. Another position somewhere over here, seeing this kind of rejection of price and targeting all the way to this 1.68 level, somewhere along these levels. And if you consider this swing momentum as well, towards the upside where the market broke, guys. So if you consider this whole swing momentum over here, the market again retracing back to this optimum trade entry zone over here. This is the optimum trade entry zone where the market entered. So this was another entry for you to take long position here and targeting all the way to this swing high over here, guys. The 100% move or this swing high. So in case if you plot this web extinction, it would be 100% move, guys. So the common point between this to the common point between this to the common point between this. So the 100% is above. So definitely the swing high is where you could have targeted a minimum target of the swing high. So that's how you could have targeted it, guys. And you could have tried your stop loss somewhere here, 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 expecting the market to go further bullish. But here you can see the market rejected price from these levels. So if you consider this swing momentum over here, you can consider this zone to be an optimum trade entry zone. So let's look into a one hour time frame and analyze, guys. So if you consider this swing momentum over here, so the common point between this to the common point between this, you can see where exactly the optimum trade entry zone level rise. You can see this is the optimum trade entry zone, guys, in a 1 hour time frame. So where the market rejected price from these levels and continued further bearish. And you can see after this, the market here aggressively sweeping the previous highs, guys, here. This sweep of this liquidity and the market clearly broke here structure towards the downside. A clear chalk formation over here. So, so after this, the market retraced here, guys. You can see this kind of retracement over here, clearly indicating bearishness. So if you consider the high of this candle to the swing high over here, you can see it could have marked the 550 levels over here. This is the 550 level where you could have marked it. So in case if you try to plot the fib extinction levels, guys, the common point between this to the common point between this to the common point between this. So what you could have done is to target it all the way to 4.26 level, guys. I hope you're understanding the 4.26 level, keeping your stop loss just above this candle itself and targeting it all the way to 4.26 level over here. This is where you could have targeted it, guys. So again, you can see the market coming all the way to this order block levels and rejecting price and continuing further selling. So you can expect some kind of bearish momentum and you can expect the market to mitigate this level, guys. So there is a high chance the market might continue further bearish. You can see the market here in a smaller time frame broke the structure high, a chalk formation. So if you consider this momentum over here, you can consider again the market retracing to this optimum trade entry zone over here. You can see this kind of optimum trade entry zone where the market is retraced here. So if you try to plot the fib extinction over here, the common point between this to the common point between this to the common point between this. So targeting all the way to 1.68 level over here, you can see this is the target levels where you could have expected the market to reach or the VWAP level. You can see the long position here is keeping your stop loss just below that candle and targeting it all the way to 1.68 level. So this was another entry. And if you consider this single momentum towards the upside, so if you consider the low of this candle to high of this candle, you see the market retracing to 0.38 level. But if you consider this to be a single swing over here, guys, again the market retracing to this optimum trade entry zones over here and continuing further bullish. So I hope you're understanding, guys, why the market taking support from these levels. These are optimum trade entry zones where you can expect some kind of reaction in price. So if you consider the common point between this, so fib extinction levels, the common point between this to the common point between this to the common point between this. So you could have targeted the 100% move over here. So this is the 100% move, keeping your stop loss just below that candle or below the previous swing low, somewhere along here or somewhere along here is where you could have entered, guys. Targeting it all the way to this 100% move or the previous swing is where you could have targeted and you could have just tried your stop losses. So you can see if you consider this impulsive momentum towards the upside where the market broke structure. So the market retraced to 0.38 level over here. This is the 0.38 level where price retraced. So in case if you try to plot the fib extinction levels here, the common point in this to the common point between this to the common point between this, the market here rejecting price from 0.5 to 0.6 levels over here. So in case if the market rejects price and closes below this level, guys, there is a high chance the market might continue bearish. So, so you can see this kind of rejection of price where the market here formed another chalk formation over here. You can see this is a clear chalk formation. So if you consider this swing momentum over here, the common point between this to the common point between this, so you can expect the market retracing to the optimum trade entry zone. So you could have further continuation of price towards the downside. So you can expect further continuation of price. Let's look and watch, guys. And what I'm targeting is that even after this kind of huge bullish momentum, I'm expecting the market to come all the way to this lows, guys, here, the today's low. So you can expect a huge bearish candle over here and the market closing below the 1.130 level. So you can expect a huge bearish candle over here, guys. So this is about my Euro US dollar trade analysis, guys. So you can see there was multiple trade entries where I have told you 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11, 12, 13. So this kind of trades are very easy, guys, when the market has already formed and to explain like this. But you can definitely do it before, guys, only. But a proper risk to reward ratio is what I'm explaining you. And I have told you confluences also, where you can exactly take your trade positions in a smaller time frames as well. And with confluences only, you can definitely take. So I have explained you the confluences why you should take short positions at that particular period of time as well. So I hope if you like my videos, guys, please like, share, and comment. I think this trade over here is quite complex and I would be explaining to you in a much easier way. So, in case if you find my videos helpful, guys, please like, share, and comment. Share with your friends and family as well, and keep supporting my channel, guys. Thank you.